Welcome back, Master Students, to Track 6, Week 3-2 for Formations. Formation analysis, otherwise known as the psychological reason for price to reach a certain target. They call it a play. They call it a setup. It's outside of fundamental reasons. It's outside of anything that has to do with company-specific or macro-related catalysts, right? This is something that happens naturally because psychology suggests it to be. With higher probabilities, right? With using some statistics, we can gauge the probabilities of a certain formation to guide price action into its price objective. Now, when I speak of formation, remember, guys, I know that some of you have already seen this twice, but this one in particular is going to be a bit special. When I'm talking about formations, I am speaking about the structure, a grouped set of candles that look or appear to have a certain shape that means something, right? So, kind of like when we observe a group of tuna, fish in the ocean. Well, when tuna group into their schools, right? Logically speaking, I think that would be for predatory reasons, right? So the tuna group into a school, so they appear larger than they truly are. That weans out the probabilities of attack from a predator. And we would logically know what that can mean simply by the look of the formation. Or birds, when we observe them up in the sky, they're in the V shape, right? And they're flying. So we're thinking to ourselves, man, those birds are migrating. So based on a formation, even through wildlife, we can observe the potentials of them or whichever species it is that we are observing. They're showing us that they are doing something that typically tends to happen at around a certain time, in a certain place, in a certain shape. That doesn't differ too much from the stock market because it's, the stock market and its price action charts, that's essentially us. It's our behavior. It's who we are, right? It's the group participation, institutional, and retail. Everything all in one shot. So that introduces a mass psychology. And through the looking glass of one ticker, that can introduce one complex organism, which could be the collective group of us. It's the whole that matters, right? It's the entirety of it. So not one ticker, not one company is going to be like the other. They're going to have similar characteristics, just like you would have similar characteristics to your brother or sister, or even significant other, right? Just think of you guys being part of the same sector. You guys are both semiconductors. You act similarly, but not the same. And you differ. Right? So if we are able to track things of that nature, then we're able to see higher probability moves using psychological signals. A lot of the times, day traders use these signals to determine the future of price. Now, my son actually took an extra 20 or 30 minutes to wake up this morning after I stopped in the trading team, right? When I signed off from you guys. So what I decided is that I went back into trading futures. So I'm going to present to you guys something here. Now, you guys know that I was already practicing futures, right? To become prop firm trader or a funded trader. This was a few weeks ago where you saw me gain and gain and gain, right? So yeah, I did get suspended. Now I got suspended because I gained too fast. No joke. I had to pay for it again. Yeah, I'm not even joking. I got suspended because I reached the $1,500 mark in under 5 days. In fact, yeah, he did. He said, no, man, I think they're going to suspend you now. And I'm like, crap, I hope not. Yeah. So I reached it. I reached the $1,500 in a single session. So, given that fact, I almost screwed myself today again, right? So I learned my lesson and I'm not going to do that again. Okay. So we're going to go ahead and start off this analysis here with a group of candles that identify a certain formation. Okay. So I want to go ahead and, press play on this because this is what happened earlier today. So let's press play and we're going to press pause. If I show you this formation, what do you see? Original master students, newer master students, whomever, what do you see? What is this formation that you're observing in the chart? Feel free to speak. Ripe. That's correct. Shinzang, very close. Actually, that would be a shooting star. But yeah, that's your signal. That's also correct. We did have a 3 rising methods. So the collective, okay, there. Yeah, guys. So you can see that this had multiple bearish signals. What if you're looking at these 3 candles here, right? It is also a descending channel, right? But man, that could be a failing one. So how about this? What are the characteristics of a dead cat bounce regarding volume? What's required for volume to identify a dead cat bounce? Answer me that question. We're going to learn it here together because there are some of us who are brand new. That's correct. So what Quinn is saying is that there would be a divergence. Volume decreases with price going up. So that creates a bearish divergence, right? Do we have that in the criteria of a dead cat bounce here? So it looks like we have the upside and it looks like volume was declining. And now what is the second variable to volume to complete to observe the completion of a dead cat bounce? What else does volume have to do? Or what is the next signal to give us? That's right. So that would be the inverted divergence. So that's correct. Volume must increase on the way down. So decreasing a volume on the way up, bearish divergence. Wow, English is not agreeing with me today. And then we would have the increase of volume on the way down, introducing strength to the downside. Those are your signals for a dead cat bounce. Where am I measuring? What am I measuring here? To get my implied target, what am I measuring? What is the price objective in a dead cat bounce? Feel free to answer. Take it, team. Let me know. We covered this on the prior week. There you go. Okay. That's right. It would be downward. It would be downside from the height. That's right. So sometimes you want to go ahead and make sure that you can observe. That's right. That's right. It's more along those lines. The formation from the top to the bottom of the formation, right? And apply that was going to be my next question. And you apply to the lowest portion of the candle, the trend line that you measured, right? So using the tools that we have inside of TradingView, refer to your toolbox here on the left-hand side, and it would be the second tool, and it's called trend line. Add it with a star, and it'll show up on your favorites toolbar here. I leave it down here, right? I think it's okay for me to leave it here. But you can make it reappear and disappear using this star. Okay? All right. Now, since we have that trend line, measuring it from this point is because we have the confluence between all of these candles here, not this one. Seeing that this is the ES, this is futures price. Do you guys think that this would hit that target? It's sissy, baby. Do you guys think that it would hit that price? Now, I'm going to remind you. We're in futures price. So for some of you, you may not know this. Futures introduces true price action. No dark pool manipulation, no out of the lit exchange, nothing. Price is true to the technicals inside of futures. Do we think that price action is going to hit to our target, 58.45? Ian saying yes. Kat saying yes. Quinn, hell yeah. We have everybody saying, even Warji saying, of course. Grayman saying, it can fall twice that far in the blink of an eye. Grayman, that is an interesting choice of words. Hold that thought. I love to hear it. I love to hear the opinion here. Because we do have the signatures leading towards that downside. And we're already in a downtrend too. So we're catching the confluence of all of those things together, right? I love it. Now, let's go ahead and press play again and see if we don't catch our target of 58.45, right? We're going to do it as, you know what? We'll just do it like this. Here we go. What happened there? What happened there? Take a look at the OHLC in the top left where it says L. I know it's going to be very small. What does it say? That's right. We met it to the penny. Using that strategy, right? Okay. Now, seeing that this is a 10-minute time frame and this candle bounced with an open from 58.46 to 58.52, that did a full ATR to the upside immediately from exactly that point of 58.45. Hold on. What is that building again? What's volume doing? Uh-oh. Uh-oh. What is it? Another one. Volume decreased, and what did volume just do on that way down? That's right, Gray Man. Okay. This is a massive downside. So if we're building another one, Ripe Image is calling it. He's saying 2 dead cat bounces in a row. Do we agree with Ripe? Queenie Baby saying yes. Gray Man saying cash now. Cat, yes. Ian, that is absolutely correct. In different time frames, using a 2 minute, 3 minute, 5 minute, 10-minute time frame, we are going to notice that we're going to have several of these drops happening. So if we're counting them, 1, 2, 3, 4, 5, 6. That's right. Between 6 and 9 times, 6 and 9 ladders, that's your probability for retracement. So we bet that this is the direction. Where do we measure again? Just like you said, from the top to the bottom, and we apply it to the lowest wick, right? Okay. Here's that candle. So our bet is going to be entry at this point, because that's the dead cat. That's right at the dead cat. We're catching volume. So we're going to try to see if we can get as much to the downside as we can. Okay. Price action leads to 58.3350. Do we meet the target or not? Let me know. We got a strong yes coming from Cat. Let me know, team. What are your thoughts? Gray Man saying, I smell money. Yin Zhang saying, same process. Warg, of course. Till it is not validated, yes, says Ripe. Okay? Any other thoughts? Keep the stop tight. Let her rip, later chip. All right. Okay. Let's press play and find out if we meet our 58.3350. This is your risk. We are risking, by the way, on a 10-minute time frame that has a current ATR of 660, we are betting that this is going to drop 13 points of the 660. Are we still in? Gray Man saying yeah. Strong yes. Cat saying yes. Gray Man send it. Almost 4-to-1 ratio. Really, really good. Okay. So the odds are with us per our sentiment here. Let's press play. Read the OHLC on top. At the low, right here. What does the OHLC say? We met it to the penny again? Whoa. Okay. But this time, we had risk on for a 13-point move. So, with that said, I have something to introduce you. This here is the live image from my trade today. My execution time, stop loss at the moving average, and take profit at 58.33.50. But hold on. It's easy to talk in hindsight, isn't it? Isn't it? For that very reason, hold on. For that very reason, I have for you this. The execution orders to prove the play. Right in here. The entry level, 58.44.50. Hold on. Average to this point here at 58.46. Let's go back. Average at 58.46.50. And wait just a second. Filled at 58.40. So that's telling you that at the 58.40, I filled right here. Why would I do that if I knew? Why would I do that if I knew that that was going to go all the way down there? Can anyone answer that question for me? Because those of you know that you start off the account with $25,000. Over the period of 5 days, you have to make $1,500. I wrote 2 contracts that are giving you $12.50 per point to the downside. We're talking about a 13-point move. Quinny baby. I didn't want to make that much. That's correct. The reason why I didn't play it all the way was because I didn't want to make that much. Take a look again. Right here. This was over the span of 20 minutes. In the span of 20 minutes, I made $715. Remember, to become a funded trader or a prop trader, I cannot make more than half of the expectation on one day. I cannot draw down $400 in one play or at all during that entire day. I drew down $0 in 4 executions today, and I made 715 points in 20 minutes. I stopped myself from making more money because I'm going to get suspended. Because they're so fucking, it doesn't matter. Their rules are their rules. Whatever they are, I'm just going to have to fucking follow them. It's okay. But using discretion and using formation theory, formation analysis, higher probability outcomes and plays, knowing that we have 6 to 9 potential drawdowns before we can experience any type of recovery, counting it from right here, this means that this is a high probability play. So I am going to lever in. I did 2 of 3 contracts in it. Gray Man saying my jaws are hurting from laughing. Supercats, good to see you, buddy. So again, team, I expect you to know that I'm not going to hide anything from you. Guys, I've traded this in front of you before, but not everyone has seen that, right? But I want you to know that these plays are possible. And by the way, since this was iteration 6, that would tell us that we have. Wow, baby. Yeah. Oh, a blue gummy bear. Okay. So what I want to tell you guys is that this is iteration 6. So technically speaking, since we have 9 potential, the higher the amount of ladder downs, the bigger the probability will be for reversal. I'm going to mention it here again, mommy. Don't worry. I got you. Remember what I just said. It's critical to hear that. When you're counting your ladder downs, 6 to 9 is the typical reversion. So knowing that we're on iteration 6, what do you guys think? Do we have further downside or not? Let me know in the chat. Are we going lower or no? Show the chart. Should we show it? After 6 to 9 iterations would be the reversal. So usually 6 to 9, and this is number 6 right now. Reversal, there is a hammer on there. Okay, Supercats is saying that there's a reversal. Dollar Bill's saying up. I'm saying 6 to 9 is usually where you reverse. Sorry, buddy. Thanks, guys. So this iteration is number 6. We have 1, 2, 3, 4, 5, 6, 7. Oh shit. Sorry, this is iteration 7. Do you think we have more downside or is this a reversal? Ian is saying more downside. Tell me what candles are there. What candles are here? Tara saying more downside. Buzzman saying the drops still look large. More downside, says Financial. We're in a sense engulfing here. What else is it? Okay, bearish engulfing. What else is it? Okay, well, you know what? Fair enough. We can consider it a tweezer top, sure. Yeah. There we go. True red outside bar. So it's giving us a signal for continuation and we're getting incoming red volume. Okay, so you guys said it. You guys called it. You guys said more downside. All right, well, let's press play and see what happens. You ready? Super cats. All right, guys, here we go. Holy crap. This was our take profit here. 6 to 9 iterations, and it usually retraces towards the upside. 7, 8, 9, or 8, 9, or 8, 9, and reverse. Whichever way you want to count it, whichever way you want to see it, the average is usually met. No. Ripe. I wouldn't do that in plays and futures because futures is really liquid. It's a lot of price. One runner can undo your gains on that whole play. So in futures, I would just play my play. I did a 13-point move already. I will not get greedy. 13 points, $12.50 per point. That's a lot. You know what I mean? And I traded 2 contracts. So that means that I'm getting $25 per point times 13. After making a large win like this, I will often tell my traders to size down. Size down. Restore humility. I don't want you guys chasing the dragon. So they say, right? When you are on the heroin drug, the first high gets you that massive whatever it is, and then you get the heroin addicts to chase that Same first high, but it never happens. And they call it chasing the dragon, right? Netflix specials, they're awesome. You learn a lot about drugs. So don't chase the dragon. Restore humility, come back down, size down, and respect the process. The opportunities will always be there, team. So this was the introduction to ladder downs and also dead cat bounces. Now, not only was this displaying to you what my strategy students are going to go into, which is called executions. They're approaching it now. They're over halfway at their halfway point in strategies. Following executions, then there's going to be the psychology mentorship. In this course that you're in right now, we are experiencing what formations are in the first place. Formations lead into the strategy behind the formation. Strategy behind the formation leads to how to execute that formation and what psychology is required to take that execution for the formation that you identified. You catch why the ARC Master's Course is set in the formation that it's in. It's because it takes those steps one by one in order for us to play the play that I played today. If you would like to make $500 to $1,000 or $1,500 per day in 20 to 30 minutes, then let's risk little and keep consistent in our process and respect the rules base, respect the systematic approach behind this. Because as soon as we start focusing on the process and outside of the money, that's when we're going to shift everything. Everything will move for you because you are focusing on the puzzle and not on the dollar. You're going to forget to enter just like I do because you'd rather be right than make the money. And it's hard to say that. And it's hard to officially make that a thing. Because once you continue to try to decipher the chart over and over and over, night after night, day after day, your affliction is going to become to solve it. Because you keep drawing down your account. I keep drawing down mine. I kept drawing down my account further and further and further and further. To the point where I didn't even know what to do. So I just stopped. I was like, wow, I'm completely out of money. So then there goes that story that you already know of me, where I started with $88. That's why I started with $88, because I drew down. I didn't have anything else or anyone else, so I couldn't. So I started all over again. In fact, I gave myself 3 months to study, and then I started to risk on again with those $88, except that the gains for an $88 account, following the process the right way, using 1.5 to 2.5% portfolio exposure on $88, meant that my gains would be 60 cents, 30 cents per execution, over and over and over again. So the analysis that I had to do was pretty extensive in order for me to meet 100% plays on shares, because I didn't know what options were. I did, but I didn't play them. So I would identify these huge plays so that I can play those. And get this, I wasn't awake during those plays. My son had just almost lost his life because of iron, and I couldn't execute during the day. So what I had to do was set my entry, my stop loss, and a take profit, and go to sleep by 5 a.m. And hopefully when I wake up, it played out. So I would spend hours upon hours studying charts and making my probability base and trying to solve the puzzle so that I can turn $88 into hopefully $100, into hopefully $200. BBBY was one of those plays that got me a lot of followers. Because in a huge downtrend, I said Bed Bath & Beyond would likely move 114% up the next day, from $14 to $29.52. I set my target to enter and I set my target to exit on one share that was $14. I made $16 the next day, and price rejected at $29.53. And then I had $106. And then from 106, I then had 104. And then I had 110. And then I had 108. And I continued upward. That $88 turned into $550 in the span of maybe 4 weeks to 6 weeks. And then my laptop broke. It couldn't continue. And I didn't have enough money to buy another one because I was out of a job and I was up to my ass in debt. So I spent $250 from that money to buy myself a really old MacBook Pro that I continued to fix and continued to repair day after day so that I can put my analysis up on Twitter as ARCa Bulls. The reason why I did that was because Twitter was my playbook. It wasn't me looking for followers. It was actually my playbook. That was my diary. You can still see those plays today. They're still posted there. 15 to 21 part threads as to why price action was going to do what I said. I trained myself to become the trader that I am today because I fucking said no. Because I was not going to lose. Because the only option for me was to fucking win. Because my son was not going to take and didn't deserve a loser. So this is why I'm showing you these shortcuts today, because I know that you guys can benefit from this. Formation theory is the very beginning for this. Every single asset that we have traded in the financial markets has its own characteristic. Tesla being one of these. Buzzman introduced me to something a few weeks ago into a formation that I couldn't believe. Right? I was like, dude, what, like you're introducing to me this huge ass inverted head and shoulders, right? Double, triple potential shoulders here. Let's go ahead and just mark this off. I have his chart, but I just want to go, I'm going to go step by step, right? This entire area here marks off shoulders. 1, 2, 3, head. 1, 2, potentially 3. Are you guys able to see it? The huge head and shoulders, right? Inverse head and shoulders. Well, that's because it is there, right? It's there. Optimus Prime shoulders for sure. Okay, so if we have higher probabilities with that formation in a larger time frame, what's to stop us from making this an even larger time frame to observe what it looks like for real? So why don't we take this maybe to a week? Well, that's starting to show up as a little more clear, isn't it? Why don't we do bi-weekly? Damn. So we're getting introduced to now 2 shoulders, massive head. Cool. I like that. But what if we introduced something that you don't usually think of? And I want you guys to explore the shit out of the charts because I need your imaginations to get there. Go where no one is willing to go. Go where everyone thinks that there is no answer there. Let's go to the annual chart. 12-month. Answer me this question. What does that look like to you? What is that formation in front of you? Queenie baby, I know it is. That's right. We are observing an annual bull flag. Just to prove the utter strength that Tesla has under its belt. But wait, not only that. Not only that. Is that this 2023 year closed green, right? Price opened down here all the way at 118.15, right? And it went all the way. all the way up to the target of about almost $300, right? 301.49. Now, what happened here, right? It's kind of decreasing, right? So what happens when we approach the closure of a candle? What happens when we're approaching the closing of a candle? Answer me the question. It pulls back 50%. It decompresses. That's right. As we approach the closure of the bar, this being, say, for example, the last 3 to 1 month to closing the annual, starts to decrease, right? Now, I don't know if you guys remember this, but when this thing started to decrease, this was $300. Last year, at around $250, right about here, what did ARCa Bulls say price action was going to do in Tesla last year? What was it going to do? Because we were at our semi-annual close, and this thing was likely to create what? That's right. It was gonna dump based on probabilities. From $257, we called out a price of under $200. So if you take a look at the 50% of the annual bar, which is right around here, it's around 170. And if you recall correctly, it dropped around there, 160, 150, 170. It bounced in there. It retraced 50% of the annual bar, and then it came back up. Of course, that's what it does. But when we close the year, the next year, 2024 started, and we pulled back. Why would we pull back on this candle? Answer that question now. Now that we open the new year at 2024, what is it? Well, it is a validation. But what are the statistics? 60 to what? I know you know that saying I tell you every single day. 60 to what? That's right. 60 to 70% of the time, you finish it. Let me know. I need to know that you guys are with me. 60 to 70% of the time, finish the sentence. That's right. We get that retrace. But how much is the retrace? That's your prior bar retrace, 30 to 50%. That's right. That's right, you guys. You got it. 60 to 70% of the time, we'll experience a 30 to 50% prior bar retrace. So the new year printed. This thing retraces 70%, maybe 65%. Let's just say 65% from the 30 to 50%. Nice. And then it bounces because it already got the 50% retrace. So we would bounce back to the upside. Right? Now that leaves us with a range for the bull flag. What is the implied target? How do we measure the bull flag? That's right. We'll get the poles. Top side of the pole, right? That's right. That's right, Queen Baby. That's how we measure the targets. In other words, Tesla is on a macro trend to the upside. This time next year, Tesla could be experiencing a potential break into the $8,000 to $1,000 mark. It's hard to see things like that, team. It's very hard to see things like that. And in fact, I think I would probably give it a little more. Right? So we're moving at around $80 in ATR per year. So if the next year opens up at 250, then we would be breaking the $300 mark. So let's say macro trend tells us that 5 years would be Tesla at around $1,000. Again, it depends, guys. It depends, because this is 1 year right here, and look what it did: $27.80 to $232. It's the trend leads towards 5 years, but that can be different when we start experiencing what's called price discovery. There's nothing to stop it. And that's what it's trying to do again. When this thing breaks the 412, this will likely explode, because there will be nothing to stop it from going. You understand? Okay, let's go back one more time. Starting from Buzzman, what was your time frame on that inverse H&H? What was it? Price discovery when charting. You were on the weekly. Okay, well, this is just, we're going to do this in strategies. Okay? We're going to learn why in strategies this would happen. But taking the length of your bull flag, well, I mean, that's pretty fucking confluent to a zero fib, right? Meeting psychology. Strategies is the combination of strategies together, geometrics against probabilities. Probabilities against psychology. Psychology introduces probabilities. Mathematics, geometrics, psychology, whatever you want. We will learn how to do that in strategies. Not here. We need to introduce it first. Okay. The weekly time frame is what Buzzman was talking about, right? Good stuff. So Buzzman, let's identify I don't want you to identify this formation. It's not part of the immediate short term. Grayman, I love you, buddy. Thank you so much, dude. I appreciate that so much. Guys, but which, by the way, if yes, we are, you know, whatever, we're at halfway point. I think next week will be the halfway point. Actually, this Sunday, this Sunday will be the halfway point for the strategies continuation, strategies to students. Okay. So make sure to reach out to me again. I need to make sure that I can continue that. If I don't have enough interest in it, then I'm not going to continue it. ARCmasterscourse@gmail.com. Make sure to let me know that you want to continue into strategies following this. Okay. Don't focus, Buzzman. Thank you, Dollar Bill. I appreciate you, brother. Yes, yeah, I remember Ripe. Strategies. You want to separate them. Don't focus on the inverted head and shoulders, okay, brother? Let's not do that, because we need to focus on how price action is behaving in the first place. So identifying from this larger thing, the channel, right, would be a lot more important. Now, identifying the channel would mean, thank you, Athena, I appreciate you so much. Taking the width of your channel, top to the bottom, and applying it to the candle that breaks out, that would give you a target of around 259.63, which, you know, we got 270.92. Pretty freaking damn close, and it never passed it. So that's your formation rule here. Now, do you guys remember what the rule is? ARCa's what? Is it to break out of a descending formation? Speedy. That's correct. That was really fast, bro. No pun on the name. Absolutely. Your 0 point is not 1. This is 1. Test 1, test 2, test 3 followed by what? What does test 3 introduce? capitulation, the downside. That's right. That's right, you guys. You got it right. Test 3 of the ARCa's golden rule of 3 introduces capitulation. We got it. What's your true breakout test? And 4 or 5. That's right. In this case, this was a slam dunk. Test 1, 2, 3 capitulation, 4 breakout. This is insanity. And it met the target too. But wait. Let's do something else. If this was an immediate short-term time frame, it did happen. The validation did happen in a shorter time for sure. And it happened in the macro time over here. Good eye. So if we're talking in a shorter time frame, the potential of an inverse head and shoulders, this is now talking to my strategy students. What are you looking at here? You have, what is the reason you would break out from this channel aside from the golden rule of 3? What is encouraging that breakout? Strategy students, answer that. I know you're in here. Gray Man, that's correct. Supercats, that's correct. So what does that make this? What does that make this strategy? That's right. That's correct. Sock Chick, Supercats, that's correct. Gray Man, you got it. I love it, you guys. We are introducing a bullish buy formation breakout. 2 targets. Let's measure the inverse head and shoulders. Apply it to the top end. And it was giving you a target of about 281.29. Hold on. Where's your take profit? Mind your what? What do I tell you all the time? Mind your what in that zone? Mind your 50. That's right. Where did that shit take profit? Right at that 50%. Mind the 50% of your zones. Always. Never let go. Strategies work for a reason. Okay. This buy formation breakout introduces the potentials with its backtest, right? With the validation for continuation, introduces the potential of the monthly time frame or bi-weekly time frame inverse head and shoulders. Now we're breaking into another formation with a larger probability, which means larger time. Hell yes, it's still valid. In fact, this formation is still valid even here at 196. The formation would still be valid. Shit, man, I think it would still even be valid here. Yep, 181.25 would still be valid. Which is why we're introducing larger times. Be careful. In order for you to use this channel, go into your toolbox, right? Hold on. This channel, go into your toolbox. In your second area, create parallel channel. Highlight it. Make it a part of your toolbox. Guys, I can't tell you how incredibly proud I am of every single one of you for your participation and for your knowledge with such little time inside of the master's course. I'm not going to hide anything from you. I'm going to give you every single last step that I took into becoming any kind of trader, a trader in the financial markets, because because in the financial markets, guys, becoming a trader, saying that you're a trader, saying that you trade in the financial markets is not easy. Just saying that is not easy. Tesla on its upside is now at 239.50 from this inflection point. 239.50 from the biweekly looks like this. Right up in here. What do you think this is doing now? Are we in the process of realizing this inverted head and shoulders? That's correct. The retrace to the prior bar is definitely 50% and we're over it. 239.50 is returning a lot. That is already 50% of your monthly bar. Because why? Because we're 7 days away from closing it. Guys, somebody fucking knew something and released it here. What else is closing? What else is closing aside from the monthly in 7 days and 18 hours? Answer that now. In order to trade, you need to know when you are. When are we? What's next? What's closing? The bi-monthly. What else? The 5-month. WARG. The 8 months is around 2 months and 8 days. A little far away from that one, but we want to make sure that we can observe the confluent times. 7 days, 18 hours for the 5-month. 2-month time frame, 7 days and 18 hours. 1 month time frame, 7 days, 18 hours. We are catching 3 major macro time frame closures, which introduce the higher probability of a 50% retrace on each because they're monthly. When we reach monthly analysis, we can reach predictive analysis. When we are under a monthly, we can use forecast analysis. Good luck in the markets, you guys. Make sure to reach out to me with any questions you have. This lecture is officially over. There are no assignments for this. This was more of an introduction to your strategies, executions, and psychology mentorships following this. Figured I would go out with a bang on formations on a third repeat, making it aware that I can give more and more information under one lecture. If you would like to see the lecture from the very beginning, I increased the intensity for all 3 formations classes that I taught. Formations 3-1, and formations right now, 3-2, all introduce different aspects. And this one introduces the most. Ripe, I love that, buddy. Thank you so much, man. So any questions you may have, guys, let's pour them into here before we get ourselves into the market prep so we can figure out our place for the next day. Tesla Stokes looking massive, right? Oh man. We're going to evaluate everything. We need to take a look at NVIDIA because NVIDIA feels like it's over with the downside, and MSCR does too. Damn. Oh, man. Again and again and again and again. Yes, we can. Ripe, please remind me when we're in there. I'll make sure to remember that, okay? MSCR recovered from 204 to, wow. Holy crap. Buzzman saying that was incredible information tonight, ARCa. Buzzman, and I'm bringing you back to the beginner's mentorship, bro. I'm never going to stop providing as much as mind-blowing information to my students ever. And I will invite my advanced students whenever I have a special occasion. And tonight was one. Oh, honey baby, tomorrow they're going to be pretty good. Gee. The TSLL. This is going to be pretty cool. Finally agreed on TSLL after a month. That's the point, man. Sometimes, you buy them far out of date so that you can get the pop. I mean, Tesla is so hard to, chart. I mean, when Options and I were talking about it again, what was it? 4 weeks ago, whenever that was, I have no idea what they have fundamentally, but we were observing already an over $300 Tesla. You guys must remember that. I'm very proud of each and every one of you. I know that you can do it. But I need you guys to follow the process, guys. And also remember, when I say something, it means something, okay? When I say, guys, do not over leverage on this play. It is for a serious reason. I can't always sit there and explain an infinite amount of information as to why we shouldn't over leverage. We shouldn't over leverage in general. But when I specifically say it in a play, I need you guys to hear that, okay? It's not about the lottery shot. It's about the consistency. And it's also not about what we make. It's about what we can keep. Remember this, team. Remember this lecture. I'm so happy that all of you were able to react the way you did. I put serious thought into this. I want you guys to benefit from it. Always. From here till forever. Sebastian. Okay, Kat. We'll talk soon. Good night to the little ones. Buzzman saying, I'll be watching this 3 to 4 times in the short term, brother. I encourage you to do that, man. I do. That's what I used to do, man. I used to do that. I used to do that for my favorite traders, and I would go over and over all the information enough times to now be able to tell you when you're looking at your favorite trader or influencer or whoever, I can now tell you that they're either hiding something or they're not real. Ask Ian how many times he's asked me. You can ask Quinn. Ask her how many times she's asked me. It's a little shitty to say, but oftentimes I'll be able to tell if you're a good trader just by the way you talk or just by the way you carry yourself. Walk towards me. I'm not talking about a limping person. I want you guys to know that. I want you guys to become that. Because you're going to be so aware of psychology. Know this statistic. It takes a 30% skilled trader to make it in the stock market. But it takes 70% of psychology to make it, to really make it. 30% skill, 70% psychology. I can't teach you how to master yourself, but I can teach you how to find yourself. Futures is, the more I see stuff on futures, the more interested I am learning to trade it. This is, oh my goodness. Yeah, guys, just what I will say is to my green traders, to my beginner traders, hold off from futures for now. Just for now, right? Because I mean, we'll say, right, trading futures you need to have a certain, eye for price. Okay. So the better you are at price, guys, the execution on futures today that I just showed you, come on, man. I gave you several reasons as to why I took that trade today on futures with higher probabilities. I need you guys to identify those things first. Right? Become someone who likes to observe price. Yes, there are moving averages. Yes, there's an RSI, Stokes, volatility. Yes, I get it. Price action is your leading indicator, okay? I'm going to release to my strategy students what the final exam is going to be. Because coming here on this week for strategies, I'm going to start teaching how to give me price minute by minute. I want to know what price is going to do from 1 a.m. Euro Open all the way to 1 p.m. at my time where markets close. I want to know what price is going to do. That's where strategy students are going. Don't feel overwhelmed by that, because you'll be surprised how we can use the domino effect to understand how price probabilities lead. Strategies is going to start getting really difficult. Okay? Don't be overwhelmed. The pressure is going to be on now. Buzzman's sweating. This is where I really have expectations from my traders, okay? This is the turning point, guys. Guys and gals, right? I want you to be ever so attentive in these next few courses, okay? Speaking to my strategy students, you guys are going to love it. You guys are going to love it. Now, know for a fact that Jen may have an upper hand on you guys because Jen has been moving faster than the normal trader. It really did take her like 6 months to 7 months or something like that. You know, but she's moving around where I was. So she specifically reached out to me and said, I can't help but to say that this is a refresher. And I'm like, I know where you are. So I have her a little bit ahead. But that means a lot to me. I have a few students in here. I'm not going to mention any names anymore because I wanted to mention her just in case, because she's not here. I'm going to say that I have a few students even in here that are learning exponentially fast and a little faster than Jen. So that makes this team special. And faster than me, which is that's monstrous, guys. I became consistently profitable, consistently break even between 6 and 9 months of trading. I didn't know what executions were. But I have students here that may start doing that earlier than that. Consistently broke, says Ian. Ian, I think this next portion in strategies, I think this is where we turn that around, bro. Ripe, yes, dude. In time, I'm not rushing it. There's some goals that I'm trying to realistically have set. The month of August alone helped me realize it was time to really change it up, dude. I hear that, man. I hear you. I hear you, man. We're gonna change that up, Ian. So please make sure, dude. Let's be front and center in the next strategies courses, because this is where I flip all of you. This is where you're now touching. Remember last week where I said I never introduced this strategy to any of my master students. Almost every lecture that you're going to experience now is something that I've never taught before. So you're going into uncharted ARCa brain. Oh yeah. Dude, it's true. It's true. It's true. It's man. It really is. So strategy students, I wish you luck, but I think that I have the method to bring you guys into a different realm. I think I have it. But now and this, I mean, look at the way I'm teaching the original master student now in track 6. Look at the way I'm teaching them. I'm teaching them in, advanced format. So that they have this information available all the time. It's not to be there now. It's to know that you can be there. Let's go back to week number 2. Let's do week number 2 for a month. Let's go to week 3. Let's be about this week 3 for a month. It did evolve a lot. Yeah, the course had even evolved from track 5 students to 6. I condensed, and I improved, and I expanded. Cult of the ARCa. Jen came up to me one day and she goes, "Hey, can I ask you a question?" I'm like, "Yeah, of course." And she goes, "I didn't want to say this out loud." And I'm like, "Okay." And she goes, "You're building an army, aren't you?" She said. I found that to be the funniest thing. I was like, no. Caught me all slipping and shit. Oh my goodness. Dude. I love you guys. I do. You know what? I want to see someone else's master course, man. I want to see if they're teaching you this shit, right? They're going to teach you all the limited stuff so that you can continue taking their courses to the end of your lives. Goodness gracious, man. Guys, I had to condense this to just a few months. It used to be just a few weeks, but I realized that, damn, I'm probably going to need like 4 months here. Like a full semester and a winter session to graduate. Oh, man. Yeah, you've been tempted to take another one and compare? Oh, dude. Man, I've been tempted to just see what they have to say. And then just I would never reply, though. I would never say anything. I would never, disregard it or disrespect it. But if it is something that's truly fuckery, dude, I don't know, man. Oh my goodness, dude. People would freaking die laughing. Oh my goodness. Dude, that's so bad, bro. I don't want that guy near my chest at all. Options ever. Oh, dude. I'm sure they got good little tidbits of info. I would be questioning everything. Dude, right? That's me, man. I feel bad, but I would be doing that again. I mean, I would be doing that also. Sorry. Yeah. Let's see. I'd be grinding my teeth. Yeah. I think I would. God, that's terrible. Man, this is I got to say, this was an interesting lecture. But yeah, really. Oh man, see, that would be like, I would then start, man, yeah, that makes me feel bad, dude, because then people are like paying. People are paying. You understand? People are giving money to learn some crap. Yeah, dude. Oh, man. And you know what, dude? Yeah, there's only a couple guys out there, man, there's only really I like not even a handful. I mean, a small few of content creators that are actual traders that I respect. And that's, man, very, very, very little. Very little. I can just mention 2 of them right now. Right? And I'll still challenge the motherfuckers. One of them would be, of course, one of them would be Eric Crown. And the second one would be this guy, Chad. And the second one would be Benjamin Cowan. So there are a couple guys out there, content creators. And there are others who trade discretion in their own way, like, Fibbo Swanee or whatever. He's okay, but I don't like discretion too much. I like a mathematical approach. I heard you had to watch Eric. I even asked her. Eric Crown. Yeah, I learned probabilities, systems. I found him like a while ago, dude. No, I don't know him personally. No. Dude, the way I learned from this guy was because I realized that he had so much information that he would just say. So I started watching everything he had to say from when price didn't even matter anymore. But he was a licensed market maker at NYSE and a trader at the top floor, ARCa, which is how I came up with my name. Well, yeah, we need to prove Eric wrong. It's hard to prove someone wrong when you're running statistics. That's the epicenter of competition, bro, when it comes to analysis in any market, is when you're using statistics. When you're using mathematics, that's when you start becoming fucking impenetrable. And I wanted to start creating my own systems based on how he observed the markets and how he was trained into becoming a licensed market maker. So I followed in with that. I followed in with market making practices. That's why I build what I build. He was covering Tesla yesterday. Wow. I often watch him, but it's just his more recent videos he's really trying to, which I should be doing, honestly. He's really trying to bring his systems out, getting the skeleton key and being a part of his quantitative whatever in Discord, like all that I should be doing too. So he doesn't give away the raw information anymore, which is respectable, which is, but I say this, he doesn't know how to code. He doesn't write the script himself. It's the caretaker who writes it for him. He's been with him and it's true to him since day one, which is cool. That's fine. But all he does is give the order and build it. Yes. Well, I mean, I already have the scripts. I have currently a few. I don't really talk about them. I have high frequency trade systems already. It's not only one. I have a few. And yeah, right, baby. I mean, yeah, it's to build a system like that. It's freaking amazing, man. So, yeah, I think there could be something built, right, mommy? Yeah, I like it. I'm excited. I'm excited for the future, guys. Very excited. War G. It's my custom build, brother. It's already in the ARCa Bulls trading team under ABT scripts. You're part of the team. Go grab it. If you have trouble adding it to your trading view, just send me a DM. I'll help you out. I make these scripts for free because this is the bottom line of what I can create, man. I'm getting better and better at script building and systems development. I just don't speak about it, because that's my silent study. But that's what I'm doing. I'm I'm over there in the fucking lab. I'm building things. I'm building Frankensteins. I'm a mad scientist. Oh, I love you, options. Oh yeah, dude. Oh, and you know, dude. Thank you, brother. We're gonna do this. We're gonna do this the right way. And big. It's like it's like big. Like it's hard to, put a serious face with that and not laugh like a maniacal freaking lord or something, with your fingers like tapping with each other like Oh man, yeah. That's absolutely right, dude. It's so challenging. And dude, really, when you're coming into the financial markets and you want to be like, you want to say that you want to make it big, it's just, dude, you got to put in the big time. Like literally. You're deciding to verse yourself against the brightest minds in the planet. And I will do that. Chat saying I retired working and I still put 50 hours a week in the charting. I can only imagine how many ARCa puts in, dude. Oh man, it's a lot. It is a lot. Holy crap, dude. Let me see. I think, shit, man. I'm going to be a little kind about this, but I think I'm putting about, I'm not joking, guys. I think I'm putting about 90 hours a week. Yeah. How many weeks per day are you studying here? Oh my goodness. No, right, dude? And Chad, you're already in suicide mode, dude. 50 hours a week, dude, that's a lot of time, bro. It is. But I just, I want the screen time. I want more. And I know that I can explore my imagination to become more and make it become bigger and more bulletproof and just wittier than the rest and whatever, just whatever. You're noticing yourself just getting better and you just want to get, dude, that's literally the whole premise behind it. If you can just want it bad enough, dude, it's as simple as that, man. Anyone can be anyone. It's just how much time you put into it. You know what I mean, dude? Like, if you really care about this, then if you cared about it so much, then compare it to the care that you would put for your child. Imagine the discipline and the amount that you would prevent your child from going through and that you would do in order for them to even step out of the house. Now think about you treating your craft like that, nurturing your ability and caring for it and spending the time with it unconditionally and limitless. When you apply that kind of care into it, that kind of love, that's where you can see things shift for you. Where you realize and put the respect into this, because this can really be the end all and be all for the rest of your lives. Something that powerful, it deserves the utmost respect. It's infinitely powerful. You like, who can say that? Who can say that you just are going to travel tomorrow and then you are going to trade the markets for the first 30 minutes to an hour, and then while you're spending money, you're making money. Jeez, that's cool. Put some respect on my name. Oh, dude. Motherfucker. All right, you guys, let's cut the stream here. Let's get ourselves over to the let's get over to the market prep. Let's see about getting ourselves some dollars. Please, not her again. No. Dude, Smokey is not about her at all. Oh, dude. I love you guys. So let's go ahead and I'm going to go ahead and stop the stream here in YouTube.